Good afternoon, traders. Hope you can hear me. Hope you can see me. Here we are, and welcome to the next Admiral Trading Spotlight webinar, where we're going to be talking about another kind of simple trading setup for beginners in 2022. Fascinating little subject we've got to talk about, but of course, first here, if you're joining us here live, fantastic to have you here. Okay, you're very welcome. I appreciate here at Admirals we have a global audience that join us. So for wherever you're joining us from in the world, it's great to have you here. We hope that you're alive and well and making the best of what have been rather volatile times. Furthermore, we also appreciate that we have a broad range of experience of individuals who join us for our sessions, from complete beginners to very advanced traders. You're all very welcome here, and hopefully there'll be something here in it for you all. If you're watching this later on demand on the Admirals YouTube channel, be sure to sort of make sure you subscribe. If you found it useful, give us a thumbs up. If it's not for you, you can give us a thumbs down. That's okay. All right, we appreciate all feedback. You're very welcome to put either messages in the comments box, or if you're here joining us today on the chat box, you're very welcome to sort of pop in your questions and thoughts as well. Janos, Brun, Malden, okay, great to have you here. As I said, great to see you from all over the world. As I said, we have a very global audience here. It's great to see you, and you're all very welcome. So, without further ado, let's talk about a little simple trading setup for a beginner to start their trading journey with. And what we're going to be doing is focusing on fractals and chaos theory here today. So let's switch across to the slides. Let's bring them up and let's get on, shall we, ladies and gentlemen? So just bear with us a moment. Just here is just make this all work for us, as hopefully. Here we go. Super. So, as I said, I'm hoping you can see me, hoping you can hear me, hoping that you can see the slides. If you're struggling, put that in the chat box, okay? But we're going to talk about simple trading tactics for beginners in 2022, part 5. Okay, what I've been doing is I've been doing at least one session a month. Okay, 1 to 2 sessions a month, just to basically give you new traders just something a little bit to look at, something to work with, something to take away and utilize in their own trading journey. Okay, I appreciate that I've traded for a good while, so my trading style is probably a little bit different because I've just got all that years of experience. But I do recognize that an awful lot of the people who join us on our sessions, you're just very new to the world of trading, and we think it would help you just to have a couple of very simple trading tactics that you can take away, you can work with, you can utilize and understand whether they suit your particular style of trading. So remember, here at Admirals, we're a Forex and CFD broker with global reach and local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and allowing you to engage with markets using both the MT4 and MT5 platforms. If you have any questions about Admirals, please get in touch with your account representative and they'll be very happy to help you. So there's always lots of great support that you can get from Admirals here. One of them is the YouTube channel. As I said, this video has been recorded. You'll see it later on the YouTube channel, and you can get yourself signed up to that at Admirals Global. It's a good way to have it there, okay? Just to make sure that you can watch what is a plethora of content there by myself and my colleagues Marcus and Jens. Some absolutely fantastic stuff in there, all right, that can actually utilize and help with you in your own trading journey. And also what you'll see there in the chat box, my wonderful assistant Nathia there has put in a subscription to the Telegram channel for Admirals Global. Okay, you can just click on that as well if you want sort of time-sensitive content. So what should we talk about today, ladies and gentlemen? We'll talk a little bit about, what is a fractal, okay? Some of you might know, some of you may not. How do we use them in trading? How does chaos theory sort of, filter into trading? We'll talk a little bit about a simple version of a fractal trading strategy. And if there's time at the end, what we'll do is we'll check them out on live market. So be sure to stay with us to the very end. For those who don't know me, my name's Paul. I've traded for many years now. Traded for myself, traded for funds, traded for high net worth individuals. Primarily, my particular focus is on FX indices and commodities. That's what I particularly like to trade. I tend to be a trend trader for sort of longer term trading, and I tend to be a mean reversion and reversal trader for my shorter intraday trading. So, simple trading tactics for beginners in 2022. So in previous sessions, as it says on the slide, we've looked at simple tactics like the fiery cross, false breakouts, fail to return, etc., as potential trade setups. And remember, as I said, all of those have been videos have been recorded, and you will find them all in the Admirals YouTube channel. So be sure to check them out. Okay, some really good stuff there for you. What I always like to try and tell new traders is that it's usually impossible to capture the start of every new trend, right? Despite a trader's best wishes. And we sort of normally suggest that new traders just look at trend trading as a way to begin, but invariably traders seem to think, new traders, they think that they have to catch the start of every new trend. And with the best will in the world, that is unlikely to happen, all right? That is unlikely to happen. So you shouldn't be too hard on yourself. There's no need to beat yourself up, okay? What you just need to be able to do is, being able to analyze and identify when a trend is in full flow, and then find a way to be able to join it, which leads on to that question of, how can we join a trend in a clear, easy way? Many traders are looking for just a very mechanical, simple trade setup that will allow them to engage with markets. Today, what we're going to talk about is using fractals as part of a chaos theory setup as a simple way for us to be able to join a new trend. So we'll discuss one simple setup the traders can take away and use in these situations. So it'd be interesting to know, for those of you here joining us, what type of trader are you? Are you someone who trades trends, or are you someone who trades reversals? What do you believe yourself to be? Furthermore, how many of you would know what a fractal is, or would even know what chaos theory is when we see it in financial markets? It'd be interesting to know of those of you here. Just let me know what you feel, okay, or what your experience has been. Put it in the chat box there. Just chip away, because that always helps to understand. Peter says he tends to trade reversals. All right, that's absolutely fair and has its benefits. All right, with the right time frame, the right instruments, and the right trades. But other people will look to sort of trade reversals. Some people will look to trade intraday. Some people will look to trade longer term. Some people like to trade trends. Okay, there are many different ways to engage with markets. And what I've learned over the years myself, from owning my own experience and from actually working with lots of other traders, is that basically everybody can have a variation of success. But that is only normally based upon when they learn to trade in line with who they are, okay? About understanding and recognizing what, who they are, what the particular trading style is, and then basically operating in alignment with that. And we will come on to that, okay? That is actually, an important part of what we will talk about today. But first things first, as always, let's talk about fractals. So, anybody here in the room, would they know what a fractal is? Would it be completely new information to you? Would you have never heard it before? That's absolutely fine. Remember, this is mostly a session for beginners, but it's always good to know and understand, what kind of level of experience we have here in the room. Maybe you're very clear on what fractal is in nature. Maybe you're very clear what it is in the market. That's absolutely fine. But let's have a little chat about this, okay, to try and help educate you about what we're looking for in fractals. And as it says here, a fractal is a natural phenomenon, all right, that exhibits a repeating pattern that displays at every scale, and they're also prevalent within financial markets. So, it's Vincenzo, it's great to have you here. You're always very welcome, okay? Everybody's welcome. But as I said, fractals here, okay? That's the important thing. It's a natural phenomenon. It's a repeating pattern that displays at every scale. So let's see if I can pick up the drawing tool. So there's a picture of a fern here, just a piece of nature there. And what we might be able to see, if I've got the right colours, hopefully you might be able to see there's this kind of a small little pattern there, okay, as part of it there. And let's see if I can just make that the colour just maybe a little bit better. Hopefully that would be come on. Play ball with me today. There you go. let's see that. There we have. I have just in a fern there, and that fern there has just a small little, it's a little small triangle made up of elements of the leaf of the fern. And actually, when we look, what you can see is that actually, it actually makes up. There you go. That kind of triangle becomes a bigger triangle, okay, where you start to be, it's a kind of it's a repeated pattern at a slightly bigger scale. And that in itself, as you can probably see, okay, it then becomes part of a bigger triangle in itself. There you go. Okay, so what it is a triangle within a bigger triangle within a bigger triangle. Okay, it's a natural phenomenon. It exhibits a repeating pattern that displays at every scale. Now, of course, if you wish to, you can of course go further into the kind of let's say the scientific and even the financial explanation of it. But today, what I just want you to be able to do is to recognize where we see them on markets, how we can utilize them, and what part they can play in a broader trading strategy that you could take away and utilize yourself. So, we saw that in nature, but what does that actually mean in when we're looking at it in markets? So let's just bring this up again here. So in trading, okay, let me just change these colors here. Let's have something a bit different. In trading, okay, a fractal is a 5-candle pattern. An up fractal is where the high of the candle is higher than the 2 candles before and the 2 candles after. So this candle here is our up fractal. You might see this little sort of applet that's okay that is put there. And what it is because the high of that candle is higher than the 2 before, and it's higher than the 2 candles after. It's only confirmed when this second candle afterwards completes. All right. So if you want a very, very simple reminder, you can just look at your palm of your hand, just look at your fingers, okay? Your middle finger, okay? It should be longer than the 2 either side of it, okay? That is what you see when you see an up fractal in the market, okay? There's a candle that is basically higher than the 2 before and the 2 afterwards. Now, just think, why is that interesting? Why is that important? Because what we're interested in is, for whatever reason, price has rallied its way up, but then has actually been battered all the way back down. For whatever reason, okay, somewhere up here, there is, in this particular case, there's an awful lot of supply. There's an awful lot of orders. The price rallied up into, but then basically bears stepped in, took control of the market, pushed it away. That is useful information to know, because when we know is that when markets return to that area, we might be actually in an opportunity to sort of, to utilize that, to have a trading opportunity. And it's also a case of, when it breaks, well, we are moving into sort of new territory, so to speak. On the flip side, a down fractal, a down fractal is where the low, all right, of the particular candle is lower than the 2 candles before it and also the 2 candles after it. But we have to wait for that second candle afterwards to close. So in this particular case, this candle here, the low of that candle is lower than the 2 lows before it and also the 2 lows after it. So, we have kind of like a V shape there. All right. And remember, it doesn't confirm it until this second candle completes. But we've got to remember why is that happening? Why are we interested? Well, because basically what we can see is that effectively his price has come down into that area, and then basically bulls have stepped in, wrestled control of the market and pushed it up, which means there's an awful lot of demand down there. Okay. There's an awful lot of buyers down there. That becomes an area of interest to us. We start to, be interested in what is the market likely to do when it returns back to that zone. Okay. When it returns back there, and that's what starts to become of interest to us. So I hope that explains very simply, what fractals are. Okay. What very simply, you might have actually sort of already been aware of them, but just maybe you had a different label for them. Okay, maybe it was a different name, but now we can hopefully start to understand these are what fractals are when we talk about them in basically in relevance and reference to financial markets, to a chart, price chart. So here's a couple of really a couple of nice examples and scruffy examples. This is pound yen on the monthly chart. Okay, remember, it is a repeatable pattern that recurs, across all scales, both in nature and on markets. So Yes, these are monthly charts, but it could also be a 1 minute chart, okay? Doesn't really matter. What you have here is, okay, the low on this candle here is lower than the two before, and it's lower than the two after. So it's a down fractal. When we move up here, we can see that, there's an up fractal here printed because the high of this candle is higher than the two before, and it's higher than the two after it. This candle here is a big candle, and it's also it's a look down fractal because the low of it is lower than the two before and the two after it. This candle here, the high of that candle is higher than the two before and the two after it. Okay, so that's what it's in. That's a monthly chart. So when there are big moves in place, it is possible you might get fractals very close to each other. You might actually get one big candle that is both an up fractal and a down fractal. That can occur so long as it meets those rules. For an up fractal, it's higher than the two before it and the two after, and for a low fractal, it's lower than the low is lower than the two before and the two after. Those are the elements. Okay, and in this particular one here, yes, the candle, the low of that candle was lower than the two before and the two after it. And you can actually see, basically that price was, in a nice V, wasn't it? Effectively came down to that area, buyer stepped in, wrestled control of that market, drove it up. That is useful information to us. Okay, that is, and you'll often hear me talk about how the market is always communicating to you. All right, the market is always communicating to you. It's your job to learn the language of that market. All right, like as if you're trying to learn Italian or French or Russian or what have you. Okay, you don't get it first day. All right, you have to work at it. You have to work at it. You have to work at it, and at some point it clicks. That's the same with basically analyzing and reading markets. You have to practice at it, work at it, develop your analysis skills, keep it nice and simple until it starts to click for you. So, here's an example of fractals. This is a monthly chart, okay? And this is the dollar, Canadian, US dollar against Canadian dollar. And what hopefully you can see is that, there's a few fractals on there. That actually the price is in a nice trend. And what actually did is, it actually helps us, all right? For new traders, it helps because you effectively can see where there's mostly kind of higher highs, higher lows. But what we also start to get interested in is where there's particular areas, okay, where you get lots of fractals, okay, particularly being, driven or drawn or printed at particular times and places. So, for example, here, okay, this becomes clearly an area of interest, and we have this kind of level here that, here you go, there's lots of fractals there, okay, at that level. So remember what I was just saying, price comes down, it pushes up, price goes down, pushed up, down, pushed up, okay, breaks through it, gets back up a bit, comes down and pushed up. Also, even when we see here, when we get actually fractals being printed here, yes, this is an uptrend, but we can see that basically, as it's broken this really strong resistance, the price has been effectively, it's not been clean, it's not been pretty. Welcome to trading, all right? It's not always, but actually, very quickly what it starts to do is, by being able to identify fractals, you can start to very quickly see where there are particular areas, okay, levels that, would be of, interest in terms of support resistance or in terms of, market structure. You can start to very quickly identify, okay, and once you start to recognize and see those fractals, you'll start to be able to recognize and become interested in what happens when they get broken. That's what helps us with part of our trading strategy. So if you're a bit worried that you can't sort of draw in fractals, you might not be able to recognize them yet, have no fear. Okay, one of the reasons we've done this is because on the MetaTrader platforms, both 4 and 5, you'll find fractals are available to you as an indicator. You can see here, you go up to Insert, Indicators, then down to Bill Williams, okay, which we're going to touch on in a moment, and then you can see fractals there. You can choose that, and that will draw those fractals on. What you'll see is actually on my normal charts, the fractals are on there, but they're very light, okay, and part of that is just because I've used them for many years. My eyes, the kind of cognitive ability to recognize fractals has developed. So I don't need them to jump off the chart, because I like my chart to be as kind of as light and as clean as possible. All right. So I don't want tons of information. I just want it to be simple and clean that I can particularly work with. But as I said, if you're looking to find them on the MetaTrader platform, Insert, Indicators, Bill Williams, fractals, and you'll have them there on your chart, okay, and the work will be done for you. So what's so good about them? Well, you know, when we see them at clusters of them at certain levels, as we saw in that dollar CAD monthly chart, it provides more confirmation, okay, of particular levels or the relevance of particular levels, okay, and all of that can help us. It can help create channels and also areas of consolidation. I can assure you they are watched by large institutions, you know, maybe for different reasons, all right, but they are watched by large institutions. So when fractals are broken, something is happening, all right? The market is moving into a new area. The market is breaking structure. When that happens, we want to be ready, okay? Because actually what will happen is it might be a little bit messy, might not necessarily be clean, but there's a change happening in that market for whatever particular reason. And that can be useful information to us, right? That can be information that we can utilize to turn into our own advantage as a trading tactic. So with that in mind, how are we going to use them in trading? Well, fractals are one part of let's say, of a bigger trading strategy or a bigger trading method, which we'll talk about, which will actually help, as I said, just give a little way for a new trader to be able to take away and utilize in their own particular trading. Part of that comes from what's known as chaos theory. Okay, some of you may have studied it, some of you may be aware of it, some of you may not be. But you know, when we look at the slide, okay, there was a chap called Edward Lorenz who came out with chaos theory originally, but actually then it started to get mapped and utilized across financial markets. So with regards to chaos theory in financial markets, Lorenz and others believe that markets are chaotic systems with very complex dynamics. Yet, to a certain extent, we can make valid market forecasts, but they are neither completely efficient nor completely chaotic. Complexity theory gives an answer that markets are complex and chaotic systems, and their behavior contains a systemic and random component. So we can make forecasts, but they are precise only to a certain extent, and chaotic systems predictable for a while and then appear to be random. Now, I appreciate we've just put that there, and you might be reading that and thinking, I'm not entirely sure how that's going to help me, but have no fear, stay with us, okay? This is just basically the kind of the theory of it. What we're going to talk about is, well, actually, how does that really kind of, affect or manifest itself within financial markets? How do I really utilize that within that? Okay, and there's lots of that markets would basically move between periods of peace, calm, quiet, okay, non-volatile, and then move towards random, volatile, chaotic. Okay, and that the market is constantly doing that, constantly moving between, sort of kind of quiet, low periods, and also very kind of, expansive, volatile periods. Okay, and in many ways, it's just a very simple reflection that even with the use of IT and algos, markets still represent human psychology. They still represent human physiology in a way that human beings, we surge, then we rest, we surge, then we rest. And that comes through in financial markets, okay, that comes through in trading. We see markets will surge, then they will rest, then they will surge again. And basically utilizing chaos theory and utilizing a small element like fractals can be what helps us sort of just basically get into that rhythm of understanding, as when the market's surging and when the market is resting. So if you want to read particularly more about it, if you'd like to sort of really go into depth, well, a chap called Bill Williams, he wrote 2 books about chaos theory in trading. The first one's called Trading Chaos, unsurprisingly, and the second one is New Trading Dimensions. And they are worth reading, okay, if you can get hold of them. They will explain in much more detail than what we'll talk about here today, but they are a good read. They are interesting, okay. So Darshan asks, hi Paul, would you give much weight to 5-minute fractals and charts? Yes, you can. Okay, yes, you can, Darshan. It depends upon the context, though, of what you're particularly looking for, right? Certainly, the higher up the time frames you go, the more validity signals will have, but you can still certainly find value and validity in utilizing, fractals and chaos theory on 5-minute charts also. So what Bill Williams talked about a lot was that he was very, very clear about combining trading psychology and chaos theory and their effect upon markets, okay, and how to utilize that. You're very welcome, Darshan. Thank you for joining us today. Bill believed that trading is a psychological game, and I would agree with him there. And he felt that it was a way of self-realization and self-knowledge as a human, which, I would totally and utterly agree with, having traded for many years, having coached traders for many years. It really is a psychological game that is basically all about you understanding and discovering, who you are. The best way to succeed is to find your trading self, get to know it better, and to follow it no matter. And this comes from self-knowledge and also understanding of market structure. You might remember I said, a little bit earlier that, in terms of becoming a successful trader, a lot of that is about understanding who you are, right? And trading in alignment with who you are, okay? If you're very risk averse, okay, and you're a very risk averse individual, well then trying to trade, aggressive 5-minute charts, okay, on an intraday basis might well not be for you, as opposed to maybe trading weekly charts, okay, that allow you to do the time. Equally, if you find yourself, if you are quite a risk accepting, aggressive individual, trading, monthly charts might not necessarily be the way for you. It's about finding out and understanding who you are and then trading in alignment with that. That is absolutely key, okay? And I've seen it in many individuals, many traders over the years. So we come back to that question of, well, actually, that's great, Paul, but how do we apply this in our own trading? How do we work this out? It was Bill's view that being profitable in trading was about understanding market structure. Once again, I'd agree with him. And in order to do this, you should be aware of the market's inherent parts, which he would call dimension trading, hence his second book, New Trading Dimensions. And he had 5 dimensions: fractals, momentum, acceleration, zones, and balance line. And what we're going to focus on today is a simple trading tactic for you to work with. Is we're going to focus on fractals and his balance line, okay? Because just even from that, a simple trading strategy can be created that you can actually take away and utilize yourself. But I would certainly recommend getting hold of and reading Trading Chaos and New Trading Dimensions as part of your, let's say, of your trading education. So we've looked at fractals, okay? Now let's talk about the balance line. Enter the alligator, right? The next dimension is the balance line, and for this we use what Williams termed the alligator. Bill Williams described the alligator as being like a compass which keeps your trading in the right direction. What does that actually mean? How do we do that? How do we get an alligator into trading? Well, bear with me, ladies and gentlemen, we're about to find out. The alligator is the combination of 3 balance lines, all right? 3 balance lines. You have the alligator's jaw, which is a blue line. Here we go, let's get the old drawing tool on. The alligator's jaw, which is a blue line, okay, which is if you wish to know, is a 13-period moving average at the mid price, which is offset 8 bars into the future. It then has the alligator's teeth, the red line, okay, which is an 8-period moving average at the mid price, which is offset 5 bars into the future. And then you have the alligator's lips, right, which is the green line. That's a 5-period moving average from the mid price, which is offset 2 bars in the future, okay? Those 3 balance lines go up towards making the alligator, okay? And what we'll see is we'll look at, there's times when the alligator's jaw is firmly, closed shut, and there's other times when the alligator's jaw is absolutely wide open. I'm sure you'll have seen it on TV, if nowhere else, okay? If you haven't had the joy of seeing crocodiles or alligators in the in the flesh, so to speak. So, as he says there, Bill said that when all 3 lines are intertwined, the alligator's mouth is asleep and the market is range bound, okay? When the alligator sleeps, stay flat. And what's interesting is the longer it sleeps, the hungrier it gets. So hopefully you can see here, what we've got there is prices just literally really going sideways, isn't it? And look, what have we got? We've got lots of fractals because price is getting pushed up, pushed down, okay, come down, ballot up. And this is what's happening, okay? The market is just basically being battered back and forth between that area, okay? At the same time, all right, you can see that the balance lines, they're all intertwined, okay? The alligator is asleep, all right? And when the alligator sleeps, we stay flat, okay? It's clear, there's absolutely no reason, okay, for us to get involved in trying to trade that, okay? No reason for us whatsoever. You're just invariably going to be caught short and, and be not very, very happy at all in terms of as a trader, okay? And remember, the longer it sleeps, the hungrier it becomes. A bit like myself. So, that's one element there we have, okay? And I just want you to understand, we've got the fractals and you've got the balance lines, the alligator, which is known as. Once the alligator wakes up, its mouth, the balance lines, okay, the lips, the teeth, the jaw, they start to diverge because the alligator is hungry and it's starting to hunt. We only trade when the alligator is hungry and its mouth is open. If the price is above the alligator's mouth, then it's an uptrend. If price is below the alligator's mouth, then it's a downtrend. And hopefully what we can see here is price was intertwined there, bang, 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 bang. Then it basically broke that fractal and price started to trend. And what happened, what we saw happening was the alligator's mouth, which had been closed, suddenly starts to open up, okay? It's opening up because it's hungry. It wants to eat, okay? And what we can see is that basically price was just running its way up there, okay? Price was just basically working its way up there in a nice trend, okay? Remember, it's just, when the price is above the alligator's mouth, then it's an uptrend. When the price is below the alligator's mouth, it's a downtrend. So you might be saying, well, actually, Paul, that's great, but how do I set that all up? I'm a MetaTrader. In the same way that fractals are on there, you can actually find all of the elements, okay, of the Bill Williams chaos theory concepts. They're in both the MT4 and MT5, okay? They're already built in. Remember, insert, indicators, Bill Williams said you've got fractals, okay? You've also got all the other elements, but the alligator, okay? For today, what you need to look at, focus on is the alligator and the fractals, okay? That's all we need to look at as a very simple starting point. And as I said, when you click on the alligator, it's already set up in MT4 and MT5, okay? And you can see there, as we've just shown, how you can find and add it to your charts, all right? So it's all there and it's done for you and it's plugged in and it's ready to go. So it makes it easier for you to start working with it straight away after this particular session. So how do we actually trade it? What do we do to trade it into there? What we do is we look for the alligator to awaken, all right? So remember, as the price starts to move off in a trend, that basically starts to have the alligator's mouth open up. When price breaks the previous fractal, we trade in the direction of the break, okay? Our stop loss goes at the teeth. Remember, that is the red line, all right? That's the red line, okay? Absolutely, that's the red line. The teeth also becomes the trailing stop loss. Once the alligator's fed, it'll go back to sleep, all right? So in this particular case, we can see the price is beneath, okay? Price is beneath the alligator's mouth. And what we have is, we have particular areas of, here we go, you've got fractals there. And as those fractals are broken, that allows us to sort of get short, okay? In this particular case, we want to trade, okay, in the direction of the break. We look to short. Our stop loss is, remember, as I said, is actually at the teeth, the red line. That's where our stop loss is, okay? And the teeth also becomes the trailing stop, all right? The teeth, so as the price moves down, you can see your stop loss would trail along the lines of, here we go, of the element there, okay? And what it is that actually, as I said, the teeth become the trailing stop. So when it actually gets firmly touched, you'll be taken out here. And then what do we see? All right, the price basically just goes back sideways there. You can see the alligator, its mouth is closed, and it's basically the balance lines and price are intertwined. That alligator is fed, and it's fed well. And basically, once the alligator is fed, it goes back to sleep. Once again, not unlike myself. All right, so that is the way to look at it, okay? That's the way, just to sort of keep it simple in terms of how we can use fractals and how we can use just the alligator just to start to build a simple trading tactic that we can utilize for our own work. So, there's just one or two examples here. This is pound against dollar on the hourly chart. What we can see is that price is going sideways there, isn't it? See how there's lots of fractals because price is just basically getting battered back and forth there. Battered back and forth and not really terribly helpful to us, not very helpful whatsoever. But then what we see is we start to see price get above, okay? Price gets above the alligator's mouth, okay? And then you can see here, this last fractal, price breaks it, okay? Not only does price break it, okay? Price breaks it, but it actually closes. This is when it starts again. Price breaks and then closes the other side, okay? The other side of that fractal. So the first element is met. So remember what the rules are, okay? Once it's broken, structure and closed, well, that is effectively our chance to enter, and our stop loss is down at the red line, okay? Remember, it's down at the teeth. As price takes off in a trend, and admittedly, this is a very, steep trend, what happens is that variably, our stop loss trails along with the red line, okay, with the teeth. Until here, where we can see that basically it is effectively done, and the price goes a little bit sideways. The balance lines start to change a little bit, okay, until actually it crashes through and makes a new move there, okay. But what you'd have probably been looking at is that price there. Here it closes, okay. That's where it closes, okay. It closes, and what you'll be finding is closing here with your stop loss, and then basically you trade it to move. So the price moves but comes back at you, okay, quite significantly. Remember what we were saying, okay. The longer the alligator sleeps, all right, the hungrier it becomes. Here it's just effectively it's the end of a trend there. It hasn't really slept very well. It hasn't really intertwined, has it? It hasn't done that at all. What we want is to have a good sleep and then break, okay, break out, get above, particularly above or below the alligator's mouth, and then variably, as you said, the longer it's been for sleep, the hungrier it becomes. That's what you're looking for. There's no need to rush and try and race and trade every single event that's set up. And examples of invariably where we see that price is going sideways there on the 4-hour chart, okay, then it starts to break, okay, starts to break and close above. So invariably what you're looking is when you're getting close to the other side of the fractal with the red line, that is what we're particularly looking at, okay. And then more advanced versions are that actually you can start to add on to your position as it goes, and then invariably, as I've said, you're trailing your stop loss until here it's taken, and it's the teeth, okay, the red line is actually is touched and taken. Price actually falls down. We're now beneath it. Price comes back and it goes sideways. Remember, this is a 4-hour chart, so it's going sideways for a day or two before it actually breaks and runs again. Okay, that's what that's what you're particularly looking for. Just looking for periods where price has gone to sleep. All right, price has gone to sleep. Price has gone sideways. That's what we're looking for. Okay, and the alligator sleeps. Okay, that's what we're looking for. It's when the alligator sleeps. The longer he sleeps, the hungrier it gets. That's what we're actually looking and aiming towards. So, in conclusion, ladies and gentlemen, markets are chaotic systems with complex dynamics. That allows chaos theory to work well. Bill Williams explains chaos theory in his books and how to apply it in trading. He talked about how it's combining trading psychology with technical analysis. We utilize fractals as the first dimension of technical analysis. And then you can use the balance line or the alligator as the final dimension. Both fractals and the alligators can be found as indicators on both MT4 and MT5. Just remember, okay, to make it work best for you, when the alligator is asleep, the lines are intertwined, we stay flat. You don't take trades, okay? When the alligator is hungry and looks to open its mouth, then we all look to feed. We've got a couple of minutes left, so we'll switch over to the chart in a moment, just to have a look at one or two elements, just to help you embed what we've talked about today. But remember, don't forget to join us next time, ladies and gentlemen. At the same time on Wednesday, join me again to learn about trading through uncertain times and volatile periods, including what to be aware of from dangerous zones around the world, how uncertain times and volatile periods affect different asset classes, and how to turn it from a threat into an opportunity. That's 2 o'clock London time, Wednesday, 6th of April. Check your inbox for the webinar link or click on the link on the website. So if you want to get in touch with us, if you've got questions, of course, always go to admiralmarkets.com or just email us at global@admiralmarkets.com to get an answer. And as I said, this video and others, you'll find them on the youtube.com Admirals Global channel and also on facebook.com /Admirals Global channel as well. So I hope you found that useful. I hope you found that interesting. It is worth reading more about Bill Williams and chaos theory, but there in two elements, simple elements, fractals, okay, and the balance lines, you have the ability to start to have just a simple trading setup that will help you, okay, as a new trader starting your journey. We've got a minute or two left, so what we'll do is we'll just switch across to the charts. If you just bear with us for a moment. Let's hope we can bring this up here. Let's Okay, so here's a couple of charts here. What we have is, here we go. What we have here is, this is pound against US dollar on the daily chart. All right, and what we can see is that invariably, what we can see is that the price was going sideways, wasn't it? Price was going sideways, but helped by the fractals that we could see there. It was just confirming that price was in a very sort of consolidating period. And what we were looking at is that we can see the balance lines were intertwined as well. The balance lines were intertwined. Price is going sideways, printing lots of up fractals and down fractals, okay, and that can basically go through it, and the price, the balance lines are intertwined, okay, with price itself. Then we get a breakout and a close beneath it, okay. Then we're into, like, as I said, new territory, okay, and where we can actually, short the trade with the stop at remember at the red teeth, okay, line, and then basically you can run that down as price moves, and it's actually there where we get basically taken out when price comes back to our particularly trailing stop. So that is on a daily chart, but I think one of the chaps, I think Darshan, sort of asked about it can be used on 5-minute charts. Yes, it can be. Okay, yes, it can be. All right, and just putting on the 5 minutes charts there. Okay, and what we can see is, let's have a little look this morning. Just 1 second. Let's do this here. Is hopefully just 5-minute charts here. We can see hopefully is that the price was going sideways, wasn't it? Price was going sideways. Balance lines are start to be intertwined. All right, and actually what occurs is, let's just make that a little bit smaller, is that it's here when price closes above this fractal. All right, price closes above that fractal, and that's where we know we're getting long with our stop down at the teeth, and then you can see for yourself how it runs its way up. And you're invariably sort of being taken out around about here, but it doesn't really. Price actually does a reversal, as you can see there, and price then gets a break. What I'll be saying is that, yes, everyone will be looking at that saying, oh, that's a great trade, and you could take that because basically price breaks the fractals, it's beneath the mouth, but what I normally say is, as I was saying earlier, is that actually what we prefer is to see the price intertwined. Remember what we're saying, okay? The longer the alligator sleeps, okay, the hungrier it becomes, and that for a new trader generally tends to be the kind of smartest way to the smartest way to operate there. So there we go, ladies and gentlemen. Unfortunately, we've run out of time there, but I hope you found that useful. I hope that's given you a little bit of insight. Remember, those indicators are on the Admirals, okay, MT4 and MT5 platforms. So they're already there. You can plug them in. They're already set up, okay. You can utilize them. So, I hope you took some notes. If you didn't, well, you can watch this again on the Admirals YouTube channel, okay. It's worth it. Just pick up there. Keep it nice and simple, all right. But remember, ideally, you're looking for, the alligator to sleep as long as possible, because the longer it sleeps, the hungrier it becomes, the bigger the trend it's likely to have. And that's what we're actually looking to try and get on board and trade with. So as always, it's just for me to finally to say that I wish you the very best of success in your own trading endeavors, ladies and gentlemen. I hope you have a fabulous week and weekend, and I look forward to speaking to you soon. Trade well, everybody. Cheers.